what are the signs of market tops and market bottoms? Okay. These are not exact, but if there's 12 or 13 things in here on each camp, top signs or bottom signs. When you see 8 or 10 of these come together, watch out. It could be watch out on a good way. The market could be bottoming. So I'm going to go real fast through these. Okay. Top signs. Large or no IPOs. Large number of IPOs. Not really. Not too many IPOs are actually happening. So that's not valid as a top sign at the moment. Rapidly rising prices. That's definitely valid. We're making an all-time high. I think we made our 42nd all-time high this year. Excess leverage. Unquestionably, well, look at the government, 35.3 trillion, right? And excess leverage in every possible way. Credit card debt in the public sector, corporate debt through the roof. I mean, we don't have to go into that. Excess leverage for sure. Availability of credit, not as much, because when the rates went from 0 to 5, I mean, borrowing costs have become prohibitive, but the availability is still there because the Fed constantly pumps money into the system. Number 5, over-optimistic front covers of newspapers and magazines. Yeah, to a point. I mean, actually, yes and no. That's probably 50-50 because I am seeing some, okay, so your best bet is going to be when Kramer says on CNBC, stocks only go up, buy anything and everything. And then that's definitely the top. So that is your best contrary indicator. Very high trading volumes, meaning capitulation to the upside. That's not there because actually on this rise to new all-time highs on a daily basis, the volume has been pretty anemic. Historically high PE, EV, EBITDA multiples, 100% correct. Market selling at 21 times PE ratio of next year's earnings. Well, if we do go in a recession, earnings collapse. I mean, earnings are not going to go up. Historical average is about 16, 17 max. We're at 21. Although interest rates do have something to do with that as well. But definitely we're in a high PE. Art and luxury markets are booming, without a question. I do follow this as a macro indicator. Every one of these things is making new highs. Baseball cards are fetching $3, $4, $5 million. So that's definitely a small part, but it is. Financial press and financial TV become favorites. Yeah, CNBC, obviously, and Bloomberg, whatever. This definitely is what I've been talking about today. This time is different. I hear that quite a bit because the people who say that, by the way, have no history concept. Haven't been only around last 10 years when the market's just done nothing but go up. So this definitely is valid. Amateur investors move to equity asset class. Yes, with the democratization of the stock markets, with the Robin Hoods and Coinbase and phones in our hands, swinging options. Yes, for sure. Amateur investors move equity asset class. Innovation leads to euphoria. Well, AI, right? There's an AI euphoria going on. We know that. And social proof leads to herding. So out of these 13, I would say 7 or 8 are valid. The bottom signs, no mergers or acquisitions. That's what happens in the bottom. So when we do get there, watch out for these, because now, unless you guys think we're at a bottom now and we're just going to keep going higher, then this is your box. My box, I'm paying attention to the one on the left. If you want paying attention to the one on the right, that means you're disagreeing with me, and then everything is going to keep going. No mergers or acquisitions. That's actually iffy. No IPOs. No, that's not true. So no new money from venture capital. It got kind of squeezed because of high interest rates, but I think it's still flowing. Low price sales EV. No, I mean, that's not true. Price to sales ratios are astronomical at the moment, and PE ratios as well. Many companies trading below book value. Definitely not true. Everything is selling ridiculously. Very PE multiple, low PE multiple. Absolutely not true. Central banks ease for 6 to 12 months. We just started. Pay attention. We just started, right? So the bottom will come after they ease 6 to 12 months. That means there has to be a fall for the bottom to happen. Unless it's here, it's going to go sideways. Central banks are going to cut around the globe and just we're going to go sideways for a year, and then we're just going to break out. Possible, but then market will tell me that anyway. Recession declared officially? No, because the recession will be declared 6-8 months from now, but by then we'll be coming out of the recession. The market will already have turned way before the recession ends. Previously favored sectors hated, like, for example, the Mag 7 will be hated. Absolutely not. Mag 7 is still loved. Credit only available to high quality borrowers? Not true. You can have garbage credit and still borrow money today. Negative front covers of newspapers? Definitely not true. Negative and depressed consumer sentiment. Now, that is kind of happening with the first topic I discussed about. So maybe 3 or 4 things are here. So if you look at both camps, there are more things valid or factual on the left box than the right box. So I'm saying this is not a bottom. So this is about topic about tops or bottoms. This is not a bottom. We'll see. We'll see what happens in 6 to 8 months period.